Okay. So first of all, we all know that price actually moves very erratically. It doesn't move in a straight line. That is because what's happening is price is actually like a representation of a transaction that has happened. A transaction happens when a buyer and a seller agree on a price, and they actually complete a transaction. Correct. So once this transaction happened, somebody else may not agree with us. He might think that, okay, this is too high price for somebody to buy, so let me wait for a lower price for me to buy. Correct. Or somebody who's already holding the stock or bond or whatever is the quantity that we're actually trading here, he might or commodity, etc. He might say that let it come to a higher price where I want to get a better price for it. Right? So there is different opinion in market. Market works because there are people with different opinions. So just a single transaction that has happened, right? Somebody is buying and somebody is selling. The buyer is actually expecting the quantity to go up. The seller is actually expecting the quantity to not go up. Correct? There's opposite views there. That's the reason a transaction actually happened. Correct? So now what has actually happened is we're talking about there is actually different people with different opinions in the market. And whenever people with differing opinions agree on a price, that's when a transaction can happen. And because there are billions of people who are actually trying to agree on something, right? So it actually happens that you'll have too much erratic behavior. Correct. And then after that, you'll actually have a price movement, but it will not be smooth. It will be very erratic. Correct. So this erratic behavior, in some way, if we can talk about, it's actually because of changes in supply and demand. Right. So if there is too much demand for it, like people are buying it like a hot cake, right? If you go to a good bakery and then the bun that it just gets sold, like hot bun, it just gets sold because there are too many people actually interested in it. Like when people are so interested in it, they wouldn't mind paying a small price extra to buy it again, right? So in that way, the price will start increasing and the price will increase. Similarly, when there is too much supply and nobody is buying it, what will actually happen is the seller who's holding it, right? He'll be a little scared that, okay, there are no sellers, so let me just sell it off at slightly lesser price. It's okay. I just want to get as much as possible for my current position. Correct. So because of lack of supply, lack of demand, price can fall down. Because of increase in demand, price can rise up. Okay. So the supply and demand is what is actually making the price move. This is the most essential part of market. Correct. Now here comes a special thing that under some certain circumstances, we'll be able to mark some price ranges. By price range, I mean something like, this one that I have marked 0.6975, yeah, to 0.6954 or whatever. This is a price range. So this I can call it as a price range or a zone, or everybody has a different name for it. Okay. So I can mark some regions like this, or even this one, correct? Even this one actually has this 0.7128 to something. Even this one is actually a price range. So I can mark some price ranges where we can actually expect the supply and demand to be, completely imbalanced. Like here, I'm actually expecting that the demand is very high, more than supply. And here I'm expecting the supply is very high compared to demand. Okay. So how am I able to say this? I'm able to say this because of some special qualifications, which we'll get into in slide basics only, not much in detail. A special will be given by somebody else later on in the work. Okay. So like I'll just recall whatever I said till now. Price moves because of changes in supply and demand. Correct. And under certain circumstances, we can mark few zones, price ranges, whatever name you want to give it, as places where there's a huge imbalance between supply and demand. When price comes here, we're expecting a good demand. When price comes here, we're expecting a good supply. Okay, that's the expectation. It may not be perfectly right, but it's the expectation that we have. That when price comes here, we're expecting the supply to be high, so we're expecting the price to fall. Okay. So how do we mark this? We'll get back to it later. Fine. So now the prices actually come here. Now what's actually happened is there'll be people who actually want to sell their position here. Okay. There'll be some pending orders here. Okay. And similarly, when price comes here, there'll be people who want to buy it. Okay. So there are some pending orders here. So there are two kinds of pending orders here. Here, the pending orders is of the type sell type, where people want to sell. Here, the pending orders are of the type buy type. Okay, the first question I need to answer is, what are pending orders? Okay, pending orders are nothing but orders that can get executed when a particular price is actually price range is actually reached. Okay, these orders come into action, they will come into play only when the price is actually reached. So this type could be two types. One, in the system, somebody could actually trigger it, like, okay, by the time this comes, you just sell it off, like something like a SLM order, or limit order or whatever. No, at that price, when price comes, they'll actually try to execute the order. So this could actually be in system, or it could be in mind. I can actually put a trigger in my charting platform saying that, okay, this particular level 0.7 is actually reached. So we can just go and have a look at it and try to buy the position if the setup is good, etc. Correct. So these when a particular action is being triggered by when a price reaches a particular level, we call them pending orders. Okay. So here, like I said, this is actually a sell type pending orders. Here there's a buy type pending orders. The common thing between both is actually pending orders. Correct. Now, what's the beauty of it is that because there are some pending orders here, the price trying to breach this area will become very difficult. So if price wants to go below this, it has to fight these pending orders, and if it's more powerful than the pending orders, that's where it actually comes down. The moment price comes here, some of the pending orders will get triggered. So this buy orders will get triggered. Because the buy orders are getting triggered, some aggressive buying will come and the price will move up. Similarly, if look at this one, right? So the moment the price comes here, some sell pending orders will get triggered and aggressive selling will come and it will fall down. Okay, that's the basic concept of pending orders. Now, what's the beauty about this is that it is this in some way, this region is actually protecting the price from moving upwards. Similarly, the region is actually protecting the price from moving downwards. Okay. So because of this simple aspect, now what's going to happen is, if I take a buy order here, correct? If I place a buy order here, now what's going to happen is, let us say I take some risk, like about risk reward about 1:3 or something like that. Okay. So this is about 1:3. So what I mean by risk reward, this is the amount of risk I'm able to take. When the moment the price goes down below this one, I'll exit my position. And this is the amount of reward I'm expecting. Okay. This I've just put some standard number like 3. Of course, I can change it to something else. But let us play with this constant risk reward thing and see how it is going to go. So this risk reward, right? If I take a trade exactly here, okay. So there's a probability that my risk reward can actually, my trade can actually be successful. Correct. This same trade I can take somewhere here also. Correct. The same trade I can actually take somewhere here also. Like, of all these different scenarios that you have, right? This happens to be a very sweet spot to enter a trade. Why? There are actually millions of people who are actually trying to protect our trade by buying it. There are lots of pending orders here, and they will protect our trade so that it will not go below this. Correct? So this is a very good entry point. Now, when I talk about where do I exit, right? So let us say I'm actually taking a very small risk reward, about 1/2, 1:2. Now what's happening? I can estimate a probability of this being successful. Correct? Let us say this probability of this being successful was about 0.8. Now, if I increase my target to something slightly higher like this, then the probability that this will become successful will become slightly lesser. Why? I'm actually expecting the price to move a little more, right? So from 0.8, I can actually drop it to 0.75, etc. If I increase it a little more, it will drop to 0.7. If I increase it a little more, it will drop to 0.65 or something. But here, if I increase it a little more also, right, it will straight away drop to something like 0.3. Correct? Why is that happening? Because there are some pending sell orders here, and these sell orders will actually try to move the price down, like how they have done here. Correct? So when I take a trade, what is the most important thing for me? I want to get very good risk reward ratio and also very good probability of success. Correct? These are two aspects. If both these aspects are successful, then I will say I will actually straight away and go and put a blind trade. Correct? I can blindly go and put a position there, entry point there. So now what's happening is I'm just trying to explain that this area is actually a brilliant entry point. Correct? And this area is actually a brilliant exit point. Why is that happening? That's because there are some pending orders here that are protecting our entry. There are some pending orders here that are going to resist any possible motion beyond this. So let me exit at the sweet spot. Correct? Now that I've done this, and what has actually happened is even if I take a small risk reward, I'm going to get small risk. I'm going to get excellent rewards, like about 1:5, 1:6, 1:8. These are very common things that you can see if you're actually going to trade at supply demand levels. So if I take an entry somewhere else, no, like if I want to take an entry somewhere here, then my risk is going to be very big and the reward is going to be very small. It's about 1.43. No, but if you want to take a very small risk here and still manage it, somehow, then the probability that it will hit my stop loss is far higher. The probability of this trade becoming successful become lesser. Why? Because there are not enough pending orders to protect my trade. Correct? So that's why to know where the pending orders are and to find the strength of the pending orders is very crucial for any beautiful trade. So I can trade, if you look at any beginner, right, he'll just take a trade anywhere. Like he can take a trade here. Even I take a trade here. Okay, I'm not saying I'm like some expert or something. But then if you can mark this, pending order zones, which are actually supply zones and the demand zones properly, then you'll actually have beautiful entries, which will give you excellent risk rewards and also excellent probability of success. These two together will make you far more confident and far more successful trader. So don't just blindly go and take a trade somewhere in between. Wait for it. So even if you look at intraday traders also, right? So people enter at first 5 minutes, people enter at first 50 minutes, people enter at first 30 minutes, people enter after some 1 hour. They'll wait for all the price action to do all the tricks and then they'll enter. All these people are on one side. There are other class of people who will actually wait for particular levels every day. Okay. If they're pivot traders, they'll actually wait for R3, S3, these kinds of levels. Okay. So these kinds of levels are where they'll be waiting to buy or sell. Okay. When they enter the position there, right, they are taking the smallest amount of risk and getting excellent rewards. Okay. So this is brilliant, right? Now, one more question will arise that is actually a very important question to ask. Fine, you are telling me that if I take a trade here, I'm going to get excellent risks reward. I'm going to get, excellent probability of success. But there's one more factor, right? Will I get enough trades? That's also very important. If I don't get enough trades, what's the point if I get one trade every 1 month and then I don't get enough trades, then I'm not making enough profit, right? If I take a trade somewhere, some other setup, I might be getting slightly bad risk reward, slightly bad probability of error. But I might get enough trades that I'm going to make more profit. At the end of it, we want to make more profit. Correct? But the point is, there is a market maker who's always trying to drive the market in a particular direction that he wants to move it. Okay. So for the market maker to make profit, he wants retailers like us. To fill his position, he has to trap us. Correct? This is actually a beautiful place where he has trapped people. You see this? Here there was a supply zone. What he has done is actually moved the price above it. So all these people who are thinking that there's a beautiful movement here and it can actually go even more higher. Okay, what will they do? They'll actually immediately try to enter the position here. Then actually check the volumes also. No? See, there's a good volumes here, and after that, we're not seeing good volumes until this point, where people are actually flocking into this area and trying to buy it. It's almost the highest volume in last 50 bars, if I'm right. Right? So all these people are trying to enter the position. What did the market maker do? He actually trapped them and started selling it aggressively. Okay. So all these people who are trapped right now, they'll try to exit their position with smallest loss. Correct? These are all the angry people here. There are already some sellers waiting here because there's a supply zone with some pending orders. Now we have actually added some more sellers here by trapping some people here, correct? So even these people, all these people who have bought it, they want to square off their position. So for a buy, the square off position is sell, correct? So all these people want to sell the next time it comes. That's why you see seeing some shooting volumes and then suddenly price falling here, correct? And also there are some people who have bought at the supply zone or at the demand zone, right? So this is a demand zone that has gone. It has come retested, correct? And there's some, yeah, do you want to add something? Okay. So this is actually a demand zone, right? So this is where price is actually, we're expecting some buy type here, buyers here, correct? So what will these buyers do? At this point, they would have entered their position. So what will they do? They're actually talking about taking an entry here with small stop loss, and they're trying to exit at this point, correct? So for these people who want to maximize their profit, for an entry here, they're also going to sell here. So there are three types of sellers here. One, pending orders from the supply zone. Second, this angry faces of all the people who have got trapped here. They want to square off their position. Third, these are the people who are actually buying, the happy people who are actually buying here and want to sell here. Together, they constitute this supply zone, which is going to be, which is going to become strong because of all these three kinds of people. And you've seen such precise entries here and then fall. Okay. The same story I can repeat to the other side, right? Okay, so if you want to repeat the story again, I just tell you this angry faces here, right? So what's actually happened is people who got trapped here, the sellers here or something, right? And price is down, somewhere down like this. What's actually happening is that you see huge red numbers in their profit loss statement. Like I'll tell you this basic psychology of people is they don't want to see red in their accounts. The moment they see 1 crore, 10 lakhs, 1 lakh, 10,000, whatever number that scares you, imagine a number there. That number is what they're seeing. Now, all these people are actually scared that they're actually going to lose their hard-earned income. So what they will do is next time they'll see very small numbers like -100, -1,000, -10,000, whatever is a small number according to you, think of that number. The moment they see it, what actually happens is they'll start selling the position. Okay, they'll start squaring off their position with smaller losses. So all those people are actually trying to help you create this cycle of between these two price ranges. So price is trying to be contained in this one. The more number of times this supply zone is tested, what is actually happening is this pending orders will start decreasing slowly. Okay, so at some point, the happy people who are actually buying here, they are so happy that they'll break it and it'll move up. Okay. And the moment it moves up, what is actually happening is all these angry people, they were actually seeing red numbers, right? Suddenly they start seeing green numbers. Okay. The moment they see green numbers, what will they do? They'll actually start, entering position, saying that they have actually taken a position here. Why? Because they're expecting it to go to some high level, right? The reason people are actually buying this is because they were expecting the price to go up. Okay. So I was expecting Nifty to go to some particular level like 17K. It didn't go. So I was keeping on selling off my position. Fine. The moment I'm seeing that it has gone above my entry, now all my old wishes, all my old hopes, they've actually reignited. They've actually recreated. Like, okay, now is the time that is going to go to my target because I've really worked hard and I've made a beautiful target. So I'm expecting my beautiful target to reach. So let me buy it now. I have not entered my whole position here. Let me add some more position. By the time I got some confirmation that is actually retesting and moving up, I will add some more position and they will add the position and it will go up. Okay. So now what has actually happened is until now, this supply zone was resisting the price movement, right? It was actually bounding the price. The moment this beautiful event has actually happened, now it will start supporting it. Correct? That's all there is to it. So we have done a SR flip here. So whatever was resisting is now supporting. Similarly, if the price goes down below this, right, what will actually happen is all these happy people are not happy enough to stop the price. Then price will go down. It will try to come retest because it will actually wait for all these people to. So the moment some happy people are getting angry, right, Now what actually happens is it will actually do the same thing like this here. So all these happy people want to exit their position here. So they will try to sell as low at as low loss as possible. Correct? When such a thing happens, automatically you'll have a powerful sell. So this is the basic supply demand. This one I'm talking about, where we try to find areas where we have angry people, and we try to find areas where there are happy people. And we try to find the areas of angry people above the current price. We try to find the areas of happy people below the current price. Why? Because we're looking at orders that are yet to be executed, pending orders. Correct? So if the so we're looking at sellers who want to sell it at higher price. We want to look at buyers who want to buy it at lower price. Those are the areas we're trying to mark. Okay. So I'll just try to recall whatever I told you now. This video is about to end. Okay. So first of all, I told you that price is going to move because of changes in supply demand. Correct. And second thing I told you that under certain circumstances, we can identify areas where there are angry people, and we can identify areas where there are happy people. Okay. So these areas are where we're expecting a strong imbalance between supply and demand. Okay. And these are characterized by pending orders. Pending orders are orders which are yet to be executed, and they'll be executed or they'll come into action only when the price is reached. Okay. So these pending order zones are of two types. One is the sell type, the other is the buy type. So the sell type pending order zone is called a supply zone. The buy type pending order zone is called a demand zone. So because of this pending orders, one beautiful aspect is it will try to bound the price between the supply and demand zone. It will try. I mean, if it is powerful enough, it will try. Slowly, it will start losing power, and beyond some point, when it loses the power, it will actually start going in the opposite direction. And whatever was actually resisting till now will suffer. I told you the logic of why it is happening, because all their old wishes, this one are reignited. They're actually people who are bought here are now thinking that this is the right time to buy, and I have done a stupid mistake of buying it too early. Now that this is the right time, I'll start buying it aggressively and price will move up. It's as simple as that. Okay. So this is basic supply demand that I've talked about. So first thing you need to know about at supply zones and demand zones is where you will have beautiful traps. Okay. So when should you enter? You should enter after a trap is happening. That is when you will actually have smallest risk, okay, and excellent risk rewards. If you enter anywhere in between this one, you're actually compromising on either your success probability, correct? You're either compromising on your success probability or you're compromising on the risk reward. So it's better to wait for these exact support and demand zones and then start marking them. So how do we mark the supply and demand zones? That's a different question that we'll try to answer in the next session. Okay. But what is actually happening is any expert trader that you look at, they will actually take their trades at supply and demand. They will not blindly take trades in between. Like I said, if you're taking trades in between, you're compromising on either your risk reward or your probability of success. Okay. So
quickly, I would like to ask a question here.
Yes.
So the time frame currently I see that you are using this 1 minute. So that is just for demo purpose, or we can do it when we are doing intraday.
Yes. So I've just randomly picked up one to actually show the same concepts will repeat every time.
Okay.
So this whole action that is happening here, no? This whole price action that is happening here and struggle here, this could be a small doji in hourly.
Correct.
Right. So so that is actually what's going to happen is there again you will look at price ranges where we'll actually expect supply demand imbalance with respect to that time frame.
Now supply and demand, how can we mark? You said we can see later, right?
Yes.
Okay. We need to find the traps to mark. Okay, unless until we mark, we can't say where to take entry. So you are saying once we close below the supply zone, only then we should start the sell. And once we close above the demand zone, only then we should buy. And below the demand zone, we should keep our sell. Correct?
Sort of. I mean, there are different variations to it. For example, if I'm actually, selling somewhere very close to the upper border of the supply zone, right? I will actually take far lesser risk. So my risk reward is actually maximized. That's one more story to see. Correct?
Okay.
So the safer thing is always wait for this to come down and then take an entry. That is always safe. But then even with this one, right? I'll just show you the ratio. It will make a huge difference. I'll take a short position. If I take a short position over here, right? Eventual target was this, it reached. Okay. So because of the spike here, I will just take a stop loss slightly above it.
Okay.
Okay. So the risk reward here is about 2.13. Fine. So I'll just take one more entry here with this one as close as possible to this one. My target is again going to be the same place. My stop loss again going to be the same place. The risk reward is 4.5. It makes a huge difference. Like there are different schools who advocate different things, and also based on the situation, we need to adapt it. I'll try to cover it in the next session. Either I will cover it or somebody else will cover it. So is it better to take a trade here or here? It will depend on different scenarios. We'll try to take some examples and then we'll try to show. Okay. So as of now, supply zone and demand zone is where we're trying to identify where are the angry faces, where are the happy people. Okay, that's all we're trying to do. So if prices
you said Faisal or someone else was also supposed to take on demand supply, right?
Can you repeat it slowly again?
No, you were saying in group, right? Someone else is also planning to take on demand supply.
Yes. There's one more person who will come and do that. He is actually very good at these trades. Recently, he gave a couple of trades that were very beautiful, right? So one way to do it is, look at the leg out. Like from here, if the movement is too strong, then the people who bought it here are too happy. Okay.
Correct.
And that's a good place to mark. Similarly, if the movement is like suddenly it is falling down, then we can expect more angry people. Okay. Those are simple tips to identify where angry people and happy people are there. And one more thing is huge volumes actually also going to be. So here you see huge volume bar, right? These two are huge volumes. So these are places where we can actually expect more angry people, and right? Some of it is experience, some of it is like based on rules. Okay.
We'll remember sometime back you helped me in integrating the demand supply script which I have.
Correct.
Yeah, I think I'm also seeing similar things when I put out 1 minute chart. So
yes, so every, like I told you, there are different schools. Some people use RSI for it. Some people use different indicators for it. Some people use MACD for it. Some people just look at price chart.
Mine is RSI. Yeah, mine is RSI.
So everybody has a different approach to identifying the same thing. But all the experts I'm telling you are going to do this. I will not even consider him an expert if he's taking a trade somewhere in between. For an expert, for him, the most important thing, because he has seen enough ups and downs, for him, the most important thing is best risk reward, best probability. It doesn't matter. He will wait for it. He has seen so many bad trades and so many good trades that he knows which is a good trade. Okay, so a trade can go to loss. It doesn't matter. If the trade can go negative, it might hit the stop loss. Fine, but then he's actually taking a trade at the smallest stop loss point, the smallest risk, best reward, highest probability. That's all they're looking at. Okay, I'll try to close the session here. So that's all I wanted to share in this one. So I told you a few basic things where price moves due to supply demand imbalance, and then we can actually mark places where there's strong supply demand imbalance. There are pending order types here. There's a sell type pending order. There's a buy type pending order. I've actually talked about traps that can actually strengthen the supply demand there. I also talked about SR flip, where a support or something that is supporting will actually support something that was resisting, we can become supporting. Something that was supporting can become resisting. Okay, I'll close the session here. I think we are at the edge of 40 minutes. I think we have covered it. Cool. Yeah, bye.
Thank you, bro.
Yeah, okay, bye.